Jeremy? Videotape all of our meetings now. For public authority.
Okay, we can get started.
All right, I'll call the meeting to order. This is a regular meeting for the month of March, and we have an agenda that's already been produced. But we'd like to ask if anybody has any additions for the agenda. I have one, and I'll just wait until everybody else may offer it. If not, I'd like to add the election of chairman and vice chairman from the report of the governance committee at the last meeting, which we really should have backed up with a separate election. So we'll add that to the agenda. And with that in mind, I'd like to accept a motion for the election of Jim Ellis as chairman and for Justice Martin as vice chair. All of the other committee assignments will remain as they are with their chairman and members. So if I could, I'd like to accept a motion from the floor for the election of the chairman and the vice chairman.
I'll make the motion. This is Archie.
Thank you, Arch. Motion by Archie to accept the election of the chairman and vice chairman as reported by the governance committee in their report at the last meeting. Second?
Steve. Good afternoon.
Steve. Good, Steve. And let's go ahead and vote on the motion, which was to elect the chairman and the vice chairman according to the governance committee report from the last meeting. All in favor signify by saying aye.
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 Opposed, nay. The ayes have it. Thank you. Public comment. Any public comment? Next item on the agenda without public comment appearing here will be the approval of the previous meeting minutes of February 9 and 28, 2022 and March 16 of 2022. Those are in your packets. Are there any corrections to be noticed? If not, Chair will accept a motion to approve the meetings of February 9 and 28 and March 16. All in favor signify by saying aye.
We need a motion first, Jim.
I'll move, Jim.
I'll second.
The chairman accepted a motion and waiting for someone to do it. So here we are. All right. All those in favor of the motion to approve the meetings of notes of February 9 and 28 and March 16, please signify by saying aye.
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 Nay. The ayes have it. Any bills and communications, Jeremy?
Not today.
Very good. Committee reports. Any of the committees wish to report? We'll note that there were no committee reports at this meeting since they were done in the previous meeting. Treasurer's report.
I only have, we're going to talk about the audit and the financials in a minute, but I think the only thing I would point out to you today is in the right at the beginning of the first sheet of our balance sheet, February 28th, total checking at $2.2 million. Please note that as of a couple of weeks ago, that was as of February 28th. As of a couple of weeks ago, we sent the check to Franklin County for tourism, unspent tourism funds in the amount of $741,000. So just want you to be aware that in next month's report, you'll see a drop in our total checking account as a result of that payment to Franklin County.
Very good. Thank you. Any other notes, Jeremy?
Nope.
Or if we'll go ahead with the next item on the agenda, old and unfinished business.
Gotta have a
Old and
motion.
unfinished business.
Gotta have a motion, Jim, to accept.
Well, my understanding with what Jeremy pointed out is that we accept the treasurer's report after we hear the audit report too. It's all wound up there. Am I correct, Jeremy? I can't see anything.
Oh, no, we could have
I
a
don't have
separate
my-
motion for the treasurer's report.
Then
Yeah, we
we'll,
should-
thank you, Maria. Yeah, fine. accept the motion for the treasurer's report as Mr. Evans indicated to us earlier, with all of the various total liabilities and equity of 3.5 million or so. You'll find it on page 1 of the balance sheet. All those in favor signify by saying aye. With a
We need
motion
the, who wants to do the, okay. Yeah, who wants to do the motion?
Yeah. That's right.
Make the motion.
Archie, okay.
I'll second it.
Moves. Second,
Justice. Justice seconds.
Justice. Got it. Thanks, Justice.
Yep.
Any comments or any discussion? If not, we'll assume the motion has been moved. All in favor of accepting the treasurer's report, please signify by saying aye.
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 Those opposed, nay. Very good. Now we'll go on to old and unfinished business. Any old and unfinished business that's to be noted?
No, not today.
Okay, then new business. We have 3 resolutions. Marie, do you want to do a roll call now of those present? They're all here, I suppose, and I know.
Can't hear you.
Maria? Oh, do you
Sorry.
want to do,
Yep,
Yeah,
sure.
I'm sorry.
Roll call. Sherry Boye,
Present.
James Ellis,
present?
Stephen Erman,
Present.
Madeline Flurry,
Present.
Justice Martin,
Present.
Archie McKee.
Present.
We have a vacancy on the board, and also present Jeremy Evans, Maria Bourgeois, Russ Kenyon, Pam Halloran, and Mike Crowley.
Thanks, Maria. Now, we're into resolution 2022-10 for the audit and annual report. Where do we go now with that, Jeremy?
Well, so we can have Pam and Mike lead us through a discussion of the draft audit. I emailed this to everyone a few minutes ago, and it is up on the screen.
Good.
Hot off the press.
Oh, gosh, yes. It's been a rough Monday, let's just say that. So you do have the audit report. It will be, I need to format it a little bit and before I put it on letterhead and proof it one more time. As we're sitting here, I see there's some paragraphing things. So, gosh, anyway, we'll start with the opinion on page 1. So just like when we went over last week, the IDA and the CDC, there was a major change in the way the opinion looks on the audit report. So now your actual opinion is the very first paragraph. So we do say that your financial statements are fairly stated in all material respects. We give the basis for our opinion. Management has certain responsibilities for the financial statements, and that is actually you're responsible for preparing and the fair presentation of the financial statements in according with auditing principles and accounting principles, sorry. And then we have the auditor's responsibility for the audit. Then we talk about our objectives. There's a whole extended section in here about our exercising our professional judgment. We also tell you that we've obtained an understanding of your internal controls relevant to the audit in order to design our procedures. We're looking at your accounting policies that you have and determining if they're reasonable. And then we also look at if there's anything going on that may not be able to continue as a going concern within a reasonable period of time. And that's a pretty big change on the old audit report. We also show you the prior year. We audited that last year. Nothing's changed on that. We present it again for comparative. So we're letting you know that that's in there and that we had already provided our opinion last year. And there's no change. There's also a report on supplementary information, and this will be the last year you have that supplementary information. There's a schedule in there that the Empire Zone required, and this was the last year. Everything's kind of washed out of that. And then there is another report here. It's called the Yellow Book Report, and we're looking at your internal controls over financial reporting. And that will be later on. So then we go on to the statement of financial position, and this is a snapshot at what you look like at December 31st, 2021 against 2020 for comparative. So our unrestricted cash and equivalents was 18,000 last year. It was about 46,000. That's a swing of 28,000. And we had some grants and contributions receivable of about 50,000. Last year, those were 332,000. And the occupancy tax was in that last year portion. We have prepaid expenses, which is primarily insurance that's prepaid, and that's about 4,000. Last year, it was 6,600, so down just a little bit. The loans receivable, we break it out into our long-term portion and our current portion. Our current portion is about 218,000. Last year was 169. So that portion's up 49,000. And then we have our restricted cash and cash equivalents, which is 2,248,643 against 2,392,867. So that was down about 144,000. And as Jeremy pointed out, that has decreased because that did have that the occupancy tax funds that were in there. And so then when you sent those back, the long-term portion of the loans receivable was about 1.5 million last year. That was just around 900,000. With the balance of the loan increasing, the allowance that's assessed also increases. So we look at the loans individually, and we also look at the total. So even your new loans, you have an allowance on there. So if you do end up writing a loan off, it's written off against the allowance, and then we reevaluate the allowance, and we might increase it or decrease it. So we did have an allowance of 411,000. Last year it was about 320,000. We do have a little bit of equipment, some computers. I believe we added one this year that was just above your capitalization threshold of 2,500. And so net of a depreciation, your capital assets are 11,000. Last year, they were just a few $100s less than that. We go down to the current liabilities. We had some payables and some accrued expenses, and your compensated absence numbers in there. That's also in a note. So that was about 51,000 against 46,000 the prior year. And then we get down to our other liabilities. So since you lost the contract to continue the tourism, and that those funds that were unspent were returned to Franklin County, that's shown down there as a liability. So, and you did send it over. So Maria, we'll talk about that entry a little bit. And then there's a portion there that's unearned revenue, because when Jeremy did the closeout of the tourism program, there were expenses in there for 2022, which at December 31st, they hadn't happened. So that portion was just actually unearned at that point. So, and then we have the other, which is more of a true liability. Okay, then our total liabilities were 824,000 against about 46,000 the year before. We come down to our net assets. There's two classes. It's without donor restrictions and with donor restrictions. So just about everything is without donor restrictions, except you do have this cloud splitter monies, and you did not expend those, but you did receive them. And I took a look at the grant, and when you have a grant and there's no right of return or barrier on that, and it's just you have to file maybe a report, a budget report, that's not considered a barrier. So you're able to recognize that without having expenditures with that type of grant. So that is, but it is still restricted until we expend those, and then those will be released from restriction. Any questions on the balance sheet?
No.
We go on to the next statement. It is the statement of activities, and that's showing what happened during the year. We did have, last year we had in the government funding, we had 313,000, and those were the occupancy tax. So you had received some right after year end that pertained to the prior year, and those were in there as a receivable. So this year we have about 107,000 of contractual and funding. We had 6,800 of fee income. We had our loan interest income was about 55,000. Last year it was about 54,000, so pretty close to that. Our bank interest income was $792, so that's down about what 12,000 from the year before. Program income came to about 38,000. That was up about 12,000 as well. And we had other income of 7,000, and that's a little bit of this and a little bit of that. Last year there was 65,000 in there. So so this gives us our total revenues and support of what, 442,000, because we released what was temporarily restricted or had donor restrictions from the prior year. And those were those county occupancy tax funds. So we do release those. The next page details out the functional expenses. So here they're listed by a program and management in general. So the statement of functional expenses puts them into their natural classification. So we'll go through that a little bit. Our expenses were almost 900,000 last year. They were 600, almost 690,000. So that's an increase of 210,000. We did end up with a loss in the year. We had a decrease of 662,000. Last year we had an increase of 4,500 or 45,000 rather. So that ends our net assets at the end of the year are 2.8 million against 3.5 million the prior year. The next page is the functional expenses.
Can I interrupt for, or
You
do you
wish
want
to
to put on? Well, since we're on this one statement, I'd like to ask a question if we could.
Sure, yes.
The on grant, this is Steve Ehrman, on grant and contract income,
Uh-huh.
can you give the components of what that was, not by number, but by source for 2020 versus 2021?
Not off the top of my head. So these are all grouped by, so there's revenue codes that are grouped together. So I could get back to you on that.
I'm curious why I'm wondering about that. You know, we have this $77,000 contract with the county, which I'm assuming is in both of those years, because we're in our last year of that. And we had some contract income coming in from the tourism project. I'm curious what dropped out that caused a nearly a $200,000 decline. And that's the question I basically have. And that's just I probably should be more on top of this, just my own program understanding, but it comes out to be pretty starkly when you see that drop on the audit report when it's
right. Yeah, no, I completely hear you. So there were a lot of elements in there. And we had the occupancy tax. Well, that's actually down in that grant and contract with donor restrictions below, but there were quite a few things in there.
Okay.
That got that number.
All right. Thank you.
They did differ. I can get back to you. I can.
I appreciate it. Thanks.
Sure. And the statement of function, I'm sorry, was there another one?
Sorry to interrupt. That's all.
Oh, no. We're here for you.
Right, we know that.
All right. Yeah, we could add a note and break that out, actually.
Would that help? Maybe we'll put a note in there and break out the grants.
Okay, that'd be great. Thank you.
Yep. And so if you back or go down one more, Jeremy, that's our functional expenses. So we do have a memo total line for 2020 against 2021. Our salaries and wages were down about 55,000 and our fringe was down 7,500. We had increased consultant services that went up about 53,000. Professional services were right along those lines. Quite a bit in marketing. So we had about 41,000 higher in marketing in 2021 than we did in 20. Our legal fees were also higher. Oh, I'm sorry. No, those dropped a little tiny bit, 5,000. You did get reimbursed for some. Oh, that was the IDA. Sorry. Don't mind me. You did get reimbursed for some of the marketing here, I think. So. Then we go on to our miscellaneous. It's up about 4,000 from the prior year. Our office expense was up about 6,000. You did have a couple of computers in there that didn't meet the threshold for being capitalized. So those are just expensed. Our occupancy costs were down about 3,100. Traveling and conferences were down 1,000. We had a little bit of bank service fees. Our insurance was very close to what it was the year before, up about $38. And we did have grants paid to others. So we had 262,000 against 134,000 in the prior year. And one of the items in there was the portion from the Empire Zone that was sent over to the IDA of 43,000. And we've got that on a schedule in the back. Bad debt expense, when we increase the allowance, this is where that the other side of that falls. So that was up about 50,000. And our depreciation, just about the same as it was the year before. So our total expenses were 899,000 against 688,000 the previous year. And then we go on to the statement of cash flows. So we did have an overall net decrease in cash of 172,000. This just shows you what happened to it. You did advance loans of 945,000 and you received repayments of 282,000. So that's it for the statements. Then we can go on to the notes. So we do have our regular summary of significant accounting policies, organization. The big thing that happened here is we had a name change in December. So local became economic and we refer to it now as the EDC. So that is in that first paragraph. We talk about the revolving loan fund, your basis of accounting, the definition of our net assets, cash and cash equivalents. That shows a reconciliation on the cash flow statement. So we're looking at our unrestricted cash as well as our restricted. So that gives you a total to tie to, should you want to go do that. You didn't have any in-kind services that were noted. So no one donated any anything that would be recorded. We talk about our our bad debts. See, there's another, that's why I got to proof that. Missing a space. Our allowance for uncollectible accounts is 411,000 against 320,000 the year before. So that represents about 24% of your total portfolio. Last year it was 30%. So the allowance went up 90,000, but we did drop in coverage a little bit percentage-wise. We do have some compensated absences of 12,000. Last year they were 85. So those are up just a tiny bit. Let's go on to the next page. And this is a liquidity and availability note. So this is what current resources are available for expenditures within the next 12 months. And we show the 2 years there. And then we also note that you have restricted cash and equivalents. So they're not available for general expenditure. The restricted cash is also laid out there. You didn't have any CDs. 2 years ago, you had a CD that was in there. So, and then we have our loans advanced. So we had 945,000 of loans advanced in the current year and 261,000 the prior year. And all of the terms of those loans are laid out in the next 3 pages and their balances. So we did have quite a few new loans this year.
6.
Yeah, there were a lot. So you're at $1,743,202 against $1,080,206 the year before. The next page is our capital assets. So that breaks out what you do actually have in equipment and what our accumulated depreciation is. So we have office equipment and computer equipment. We did dispose of some computers that were from like 2005. I'm assuming they're no longer there because that's quite a while ago. So that was about 4,000. Then we break out our net assets with donor restrictions. So this year we have our 22,000 from the Cloud Splitter grant, and the year before we had 228,000, which was the occupancy proceeds. And then we released last year's because that was expended. Show that there. Commitments and contingencies. You do note what loans have had to have some, they're of concern. So we do note those and what portion the allowance makes up of those. The COVID note goes there because we still don't know. There's an unearned revenue note, so that we have the 32,000 in there that I explained earlier about the proceeds that you would expend in 22. We do talk about your loan portfolio. So you used to have a concentration with the ASAP Pact. That was the majority of that. But right now, there's only one loan that takes up 20% of the portfolio. Last year, we had 26.8%. Related party transactions. So we do talk about the IDA and the CDC. Your economic development merger agreement talks about your 77,700, Steve, that you do get every year. So that was a 4-year. So that started in November of 18. So that would be up in 22. Tourism promotion services. So you did have that contract. It was kind of stalled during COVID, back up, and then the county had decided to take that back. So we do put in there that you are returning that unspent money, which you actually did already, the 742,000. Functional expense, that just shows you how things are allocated functionally. Tax uncertainty, you do file a 990. And tax years, including 2018 or later, are subject to being looked at an examination by the IRS. Sometimes we take prior year numbers and reclassify them so they're more comparable to the current year numbers. So we let you know that could have happened. And subsequent event notes. So we do look at that. I didn't put in there that the contract had ended in January because we recorded all that. So I left that off there. The schedule of economic development zone revenues and expenses. Last year, we had a real light year. And this year, the rest of that cash got transferred over to the IDA. So that's gone. The next report is the Yellow Book report. So here we're looking at our internal controls over financial reporting. So we look at deficiencies in internal control, and that exists when the design or operation of a control doesn't allow management to catch anything that may be considered a material weakness, which may make the financial statements materially misstated. So we look at those, we look at significant deficiencies, which would be, we need to bring it to your attention and let you know this is what we found. So like last year, we did have some significant adjustments that were made. And when we do look at that, we have to kind of conclude that would be a material weakness. So we have that. We look at compliance with grants, laws, and contracts, and we didn't have any instances of non-compliance noted. And because of that one finding, we have a schedule at the end here, which kind of explains it a little bit further. So it's over financial statement preparation. So in the opinion, the very first opinion, management is responsible for fair presentation. And so that's what we're noting. So that is it for this. I do have some formatting things. I don't know what happened to some of my paragraphs.
I've got a question again. This is Steve Ehrman.
Yep.
And I think you're being kind when you're going through the report and saying, here's what we noted and here's the organizational report going through the headings. But when you start talking about specific deficiencies and things that should or could be claimed, changed, can you get fairly specific on that so we know if we have some issues in terms of how we're running things, what we could move on in the future that would tighten things up and make us less exposed, I guess?
Yeah, I think, we have some very good ideas here. One of the things, all the loans I would like them to all be put on the individually listed under loans receivable. So each loan would balance, and that would be really easy to take what Maria's doing and what Russ is doing with the amortization schedules and making sure that those balance out. So our breakdown between our principal and interest, and those can vary quite a bit with just the days. So the day the payment's received. So you may have gotten a payment at the end of December and it wasn't maybe deposited until January, and Russ is picking it up on his and Maria's not picking it up on hers. So just those little variations on that. Also, what would constitute late fees. So that would be a good thing. And also having each grant listed by itself so that we're able to tie those expenses to the revenue.
Okay.
And looking at those every month and making sure that those tie. I think that would be really helpful.
Okay, wait, now you're obviously way ahead of me. This is your profession of the specifics of how you would do this, but the formats or the programs basically that we're using, are those appropriate? Are they as up to date as they could be? And it's just how we're entering the material, or how timely it is that we're entering the material. Is that the issue?
Well, your program's able to take that, and we're starting to classify things, which is really helpful. So there were items in tourism. I think it's a matter of every month we look at it and we look at our balances and we make sure that we're on track, and not at the end of the year at the audit and we're doing entries that are significant.
Okay, and I guess a follow-up to that is in the process of doing the audit, just so we understand, because we're, as board members, we're not in this day to day. But are you looking at these figures these figures each month as they're listed, or is it all at the end of the year? Do you call for it and say, okay, let's see what you did?
Yeah, we look at it at the end of the year. So when the books are essentially closed, so your subsequent, a lot of things happen the month after the year end. So you want to make sure that you're getting anything that belonged in 2021 in it. And we're including any receivables that we should have or accounts payable. And so once that happens, Maria shoots me off a backup of your QuickBooks, which is a great program. I mean, it's very user friendly and has a lot of capabilities. And Maria's using more and more of those.
Okay, and I'm sorry.
No, I'm just saying we are looking at it at the end of the year. So
okay, so if we want to know that we're on track after the first quarter and that everything is done as well as it could be, this is actually a question about our internal controls. You know, what mechanism do we currently employ, if any, to make sure that that things are being entered the right way, that things are current, that everything is being done timely, so that we're not at a point at the end of the year where you're able to note deficiencies in how we've done our work throughout the year. It seems like we should be, if there are any issues, we should be able to detect those issues at different points during the year rather than waiting for a conclusion at the end that, gee, the way you're doing it could be improved.
Right, exactly. And one of the things that has to happen early on is our audit adjustments need to be entered in as of 12/31/21. So then your reports become accurate throughout the year. So that didn't happen last year. So the very first entry we do is getting you back to what the audited financial statements were in the previous year, and then adjusting those balances to what they should be at the end of the year. So if we get we're on the same page, and then it's much easier to go month by month.
Okay.
Some of the problem, it tends to be in the grant area. So grants are, like your organization, like most other organizations, will run their books kind of on the cash basis. So as they receive a grant, they recognize the revenue, and then they expend the funds. They recognize the appropriate expenses. But grants tend to, grant accounting tends to be different. So you don't recognize the revenue until you've met all the barriers that a grant has for revenue recognition. So until you expend all those funds in the appropriate manner that the grant calls for, that's when you recognize the revenue. So until that happens, it's deferred. So in this particular, the county grant, the tourism grant, you received money for the grant. You had funds left over that was spent in 2022. So those funds are deferred revenue. You won't recognize them for grant revenue purposes till 2022. And then there's money that's left over in the grant, and that has to be recorded as a payable. I don't believe they had that payable recorded, right?
Well, no, they didn't know about it at the time of. So that was kind of an unusual situation. It doesn't happen, but technically, and Jeremy and I talked about this. So it wasn't in the grant that it was a right of return. So yes, we recognized like all of it last year when you got it as a receivable, but it ended up we didn't really expend that. So that was part of the whole calculation to go back because we had the 3 years. So stuff like that gets pretty complicated, but it also is a lot easier if it's all laid out and we're looking at it every month and we know what the grant terms are. So that was the challenges that I was having, is trying to get my grasp on what these grants were. And you guys are doing amazing things. You've got a lot of projects going on. But we needed to catch up a little bit on that. And let me just clarify, Marie's doing a great job catching everything. So there's nothing that's, missed being recorded. Yeah. It's just we have to evaluate where does it belong. And
so 2 points on that. Again, Steve, appreciate you already talking so much. But I guess what you just said partly answers a question I had about grants and contract revenue, I guess it was earlier. The first question I made, you said you'd get back and look at some of the specifics, and part of the timing, I think it looks like a timing issue. And the second observation, and I guess a question too, is when we work our figures up each month, I'm wondering if it makes sense for us, if we're not doing this, and apparently we're not, for us to be able to have somebody with strong accounting skills keep those records up each month so that we don't end up with surprises at the end of the year, and you don't have to be doing as much of a search or close questioning of staff to try to figure out what exactly transpired that led to the numbers that you're somewhat puzzled about at the end of the year. I'm wondering if there should be, I've been involved with organizations where there's an accountant who every month, and if I was president of the housing authority down in town of Harrietstown, and each month we had a contracted accountant who kept the records, everything that came in, everything was going out, all the assets and liabilities. That was reported out monthly, and then we had a separate firm do the audit at the end of the year. And I'm wondering if that could be a model in part for how we do our work, and whether that in fact would constitute an improvement in our internal controls and make it easier for you when you do the audit at the end of the year.
Yeah, so that service would now become part of your internal controls. So yeah, we're able to propose entries and kind of help, Maria would do them, and we can get you on the same page. But
so if we went that way, if that was the determination of the board, we could rely on you to do a consult with whatever outside person we potentially could get involved with, so that we make sure that everything is being done in a way where there's no daylight between what you need and what we're providing.
Certainly, that a lot of organizations are going that way because it's becoming harder and harder to get accounting personnel. There's a shortage of accounting people out there, so they're using outside firms for that.
Okay, because I think we're very good at a lot of what we do. And
absolutely,
really helpful to hear about some of the soft spots, because there's things that can be done. Apparently, we have the assets to be able to do that. And if there's any way that we can increase public confidence in what we're doing, that one thing I know on my part, and I'm sure it's on the part of other members of the board also, is we don't have concerns that there's misappropriation or misuse of funds, but we do, I think, have some concerns in reading what was in this audit report, that the funds that we have are being properly recorded each month as we go along, because we have heard about the difficulties in gathering or getting some of this to you, and that's why we had the delay in the transmittal of the report for the EDC in the first place.
yes.
Yep. So that a lot of organizations also have a complete listing that the board receives of all the grants that the agency has, the source of the grant, where it's from, what the amount is,
Yes.
and to make sure the grant funds are all spent appropriately and there's no unspent funds left on the table. So that's kind of an internal control too, but that could be something you'd want to might want to think about implementing.
And we did some testing on those the actual grants as well. So on that compliance.
Yep.
Yep.
Good, thank you. Appreciate the answers.
This is Archie, and with having taken a cursory look at the audit report, I was involved for a number of years in the accounts payable at Franklin County, and we had an independent audit every year. And at the end of the audit, the auditors would always make maybe a series of suggestions or recommendations. And I noticed that the recommendation that is included in this is, we recommend that the organization reconcile all balance sheet general ledger accounts on a monthly basis to be certain that the proper balance is being reflected. Well, that's a pretty basic common sense recommendation. I think maybe what Steve was trying to get at was we're looking for either affirmation or maybe some suggestions as to how we might proceed differently with handling our finances. Is everything in the proper proportion to our current financial standings? Do we have too many grants outgoing, not enough income, or going, not enough activity to grant? Our bank statements, monthly bank statements, or annual bank statements in proper alignment with what they should be, with our outstanding loans and accounts receivable situation. And I think that any recommendations, specific recommendations that you can make to either change our direction, to keep us in the same direction, or stop us from doing something, or start us from doing something else, would be of help. And I think he was looking for maybe a little bit more specific guidance.
Right. Archie, thank you. Your experience as an auditor is showing. And I just know sometimes reading things, I know what keeps you awake at night, but the answers on how to do it better elude me. So I really appreciate your comment just made.
So you're looking for observations and recommendations. In the finding in the report tends to be more generic because that is now, out there, and these are more specific things that would be addressed individually.
Good.
Jim Ellis speaking. Is it appropriate or proper for an auditor to send a client like ourselves a plain language suggestions for improvements, much as Mr. Ehrman and Mr. McKee spoke about? Because a lot of us are people who are familiar but haven't had the experience in accounting or ledgers or anything else that has to do with financial stuff. I'm a history teacher by trade. So I look at these things and I say, well, it looks good, but I'm not sure I understand it. So is it proper for you folks to send us a list of recommendations?
Yes, we can do that.
Okay.
Yes, we keep as we go along on our work papers, we have a schedule of findings, and that's what we use to evaluate.
Good.
So the one finding that you're seeing in the report is one that's serious enough to be brought to the board's attention. And I think we had that the same as last year.
Yes.
So that one is, as Pam is pointing out, the balance sheet accounts need to be looked at on a monthly basis and reconciled accordingly, so that they're not just done at the year end or when we're coming in and looking at it and making sure that the prepaids are recorded correctly, or the accruals are recorded correctly, or compensated absences is recorded correctly, and having to make an adjustment to do that. So if you do that on a monthly basis, just like you do your bank recs on a monthly basis, if you do all the balance sheet accounts, then there wouldn't be any real need for adjustments at the end. The other stuff that she's talking about, or you're talking about, is as she's saying with the loan portfolio, if you've got two different people are recording what's considered interest on the books, one might be recording it when the check is actually received, the other is recording it when it's deposited. There gets discrepancies in the books for that, and we'd suggest that you would get on the same page with something like that.
Right.
So you do a good job on your loan book portfolio, but that what we did notice, that was a small problem.
Right. You've got a lot of outside spreadsheets that you're using, which is phenomenal. Those need to be actually reconciled with the accounting.
So yeah. So if you have an Excel spreadsheet that's being kept, and that becomes the major thing that drives the portfolio of loans, that's only good unless it gets to the books and records, which is what you're seeing. The QuickBooks is. if it's not recorded or those numbers are not adjusted, then there's going to be a difference and we have to get it back. We have to come in and make the adjustment to the
Right.
actual Excel spreadsheet. So you've got all the pieces of everything. It's all there. It's just that they have to be on the same page. So everything has to get to QuickBooks because that's your books and records.
Okay, that's good.
Thank you. Yep.
You're welcome.
What else?
Anything?
Anybody else have any questions? Anything else from our auditors?
No, again, we just like to say again, everybody does a great job. It's and COVID is a tough thing to have. The people aren't all together,
Right.
and it's tough to bounce things off of people when the office is not all together. I mean, hopefully we're starting to come out of that, and people are going to get back into the office, and things are going to get back on track.
Yeah, we prefer being on site and going through, maybe having a couple of days, and that way it's a lot easier to have the conversation when you got it right there.
Yep.
So
For us, auditing is the best is when we're there and we're able to ask questions and are actually talking to people than to
at a distance, you don't want to bug everybody, you want to try to be as self-sufficient as possible. But and Maria and Jeremy have been incredibly responsive to anything we ask for. It just sometimes becomes a matter of what do we need to ask for or what aren't we asking for. So that's what we'd like.
Yeah, good.
Good. Thank you. Anything else with respect to the audit as described for us by our auditors? Thank you, and I think we have a resolution that we can put on the floor if anyone wishes to make the motion. It's Resolution 2022-10 to accept the 2021 audit and annual report. Is there a motion? Moved by Archie.
And Steve will
Second.
second. Steve will second. Thank you.
Second by. Any further discussion? If not, we'll assume the question has been moved and Maria can do the roll call vote.
Okay, this is for resolution 2022-10 to accept the 2021 audit and annual report. Sherry Boye,
Yes.
James Ellis,
Yes.
Stephen Ehrman,
Yes,
Madeline Fleury,
Yes, I approve.
Justice Martin,
Yes, I approve.
Archie McKee,
Yes.
and that is adopted.
good.
Yep. Thank you, Maria. Thank you,
Terrific.
our listeners, and
Thanks,
we
guys.
always look forward to your. There's so much there. Thank you.
Thank you.
Moving on,
Thanks a lot.
a resolution 22-11 to approve revised payment structure for MCM development. And Sherry, I guess that's your ballpark. You're the chairman. Would somebody make the motion? Sherry, would you make the motion?
I'm sorry. What motion am I making?
2022-11 to approve the revised payment structure MCM development.
Okay, I move make a motion to accept MCM development new terms.
And can we,
Okay, I think that bleeds into 2022-12.
Sorry,
Just approve the
2022-12.
No, we're on 11.
Oh my goodness, I better keep up. 2022-11.
Yep. Revised payment structure for MCM development. Are you making the motion, Sherry?
Yes, sir, I am.
Okay.
I'll
Motion
make
made by Sherry Boye to approve the revised payment structure for MCM development. Is there a second?
Jim, I'll second it to get it on the table. Can we get a little detail on what the revised structure is? I may have missed this in the mailing.
I think,
You
yeah, I
just
think
got
what
it.
we need, I think we need to, first of all, approve the revised payment structure and to deal with the revised payment structure for Bow and Arrow, because they're two separate corporations.
Right.
And I
But-
would suggest, let me finish. I would suggest the possibility of maybe taking both of those, into discussion, if you wish, in executive session. Jeremy?
Or do,
Oh, yeah, if you
or
have
do we
any,
want to go into executive session and hear about this and then come back out and vote on both of the motions?
if there are any elements of the discussion or questions that you might have, which would be getting into protecting the, the kind of the confidential interests of the businesses we're talking about, then we should go into executive session.
Jim,
If that's fair with everybody, then maybe what we should do is, go into executive session, and note the time, and we'll need a motion to go into executive session for the purpose of discussing payment and financial information for clients.
I'll make a motion to go into executive session to discuss financial matters pertaining to resolutions 2211 and 2212, Bow and Arrow, MCM Development and Bow and Arrow LLC.
I will second.
Motion made, second? Second?
Sherry,
I think I heard it. Who was that? Second?
Harry,
Jerry, second. Any discussion? If not, we'll move into executive session. All those in favor signify by saying aye.
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 Opposed, nay? All right, we will go into executive session as soon as Jeremy tells us everything is okay with the video and all that. So go ahead, Jeremy.
okay, everyone should be receiving an invite to go to a breakout room. Oh, it looks like we're waiting for Jim and Sherry, and there they are.
Okay,
There
good.
we are. Good. Geez, if I'd known you were gonna leave me and Sherry alone, I wouldn't have come out of executive session.
We're back.
Yeah, it's good we're not meeting first and first.
All right, we have under new business, we have two resolutions, 2022-11, we'll do separately, to approve the revised payment structure for MCM development. Motion, please.
I will make the motion to accept
Motion by
resolution
Sherry,
2022-11.
very good. 2022-11. Maria, do you want to call the roll, please?
I'll second the
Yep, I had Sherry and Steve from before executive session to bring that to the floor.
Okay.
So we'll
Yep.
go with the roll call vote for 2022-11, approved revised payment structure for MCM development. Sherry Boye,
Yes.
James Ellis,
Yes.
Stephen Ermine,
yes.
Madeline Fleury,
Yes.
Justice Martin,
Yes.
Archie McKee.
Yes.
Resolution is adopted.
Next item on the agenda is Resolution 2022-12 to approve the revised payment structure for bow and arrow. Sherry?
I will make a motion to approve 2022-12.
And I'll
Very
second
good.
that. motion.
Is there a second?
Yeah, Steve, as before.
Steve Erman, second. Any
Okay.
discussion? Any discussion? If not, Maria will call the roll.
Okay, roll call vote, 2022-12. Sherry Boye,
Yes.
James Ellis,
Yes.
Stephen Ermine,
Yes.
Madeline Fleury,
Yes.
Justice Martin,
Yes.
Archie McKee. Archie McKee.
Archie?
All right, yes.
Okay, resolution adopted.
Very good. Thank you, everybody. Any public comments? Public comments? If not, we'll talk about the date of the next meeting. It was brought to my attention this morning that we should probably consider moving our next meeting from April 13 to April 20. That's because of the possibility that people will be off on different schedules because of Easter vacation. So if that's not a problem, I will suggest that we meet on April 20th instead of April 13th. Hearing no objections, it's done. April 20th is our next meeting. Anything else to come before the group? If not, I'll accept a motion to adjourn. Motion to adjourn?
Steve,
I'll second it, Justice.
Okay, Steve moves, Justice seconds. All in favor signify by saying aye.
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 We are adjourned.
Good.
Thank you,
Thank
everybody.
you.
for coming.
Thank you.
Thank you.
Have a good day.